If you're looking for a safe haven, I see Bitcoin as the most secure, most reliable, most certain thing in the entire economic universe. And if you're looking for some place where you can store your life force or your economic energy, you know, there's no real question.
A fun fact, there's 46 million millionaires on the planet. It's only 21 million Bitcoins, so they won't own a Bitcoin. So if you own a Bitcoin today, you will be a millionaire in the future, for sure.
If you wanted to save $1,000 and you wanted to have it beyond the reach of a company, a CEO, a government, a bank, and you wanted to have personal custody of it, you could have that with Bitcoin. Bitcoin is a technical solution to give 8 billion people property rights. If I can own $100 in my hand as easily as I can own $1 billion. Starting in March of 2020, every corporation in the world had a problem with their treasury strategy. Before March of 2020, this was a very minor issue. But after March, institutions began to pile into Bitcoin, and 1,000 different institutions started to acquire it. The volatility characteristics changed. The support for Bitcoin changed. It's a totally different asset class today. Starting on February 8th, we now have Square, MicroStrategy, Marathon, MassMutual, and Tesla, all very large publicly traded corporations that are acquiring Bitcoin. The world's very different today for Bitcoin than it was back in 2018. Okay, so what's Bitcoin? Well, Bitcoin is the strongest asset the human race has ever invented. It's like gold with none of the defects of gold. You know, I think of Bitcoin as like that shining city in cyberspace where billions of people will eventually want to live, right? Instead of moving from Europe to America or moving from the old world to the new world or whatever, we're moving from the planet to cyberspace. We can't move to outer space yet. I can't get 1 billion people off the planet and settle on a better Earth, but I can move 1 billion people to cyberspace. Bitcoin is property in cyberspace. It's 21 million city blocks in cyber Manhattan. The people that move there first, right, get to buy the land cheapest. And then, you know, how many people will eventually want to live there? Well, unlike Manhattan, where there's a limit, there's really no limit. Why wouldn't everybody want to live there, right? I mean, I don't know that there won't be other cities in cyberspace that might meet other needs. I mean, I suppose if the Chinese, you know, made it illegal to own Bitcoin, but there was a Chinese Bitcoin, there might be a Chinese version of Bitcoin in cyberspace, kind of like Alibaba, you know, and Ant and WeChat kind of branched off from Facebook and Google and Amazon. So there might be some other digital dominant monetary networks or dominant monetary networks, but Bitcoin is the greatest the greatest monetary network that the human race has ever developed, and it's certainly the dominant one right now, and it looks like it's going to be continue to be the dominant one for as long as we live. So what makes it dominant? Well, I mean, clearly the architecture is proof of work, or in other words, throwing up a wall of encrypted energy, right? It's all of the crypto hash power that's channeling energy through the hashing function, which creates the stability and the security. And so it's based upon the architecture, but ultimately the appeal of it is that it's an open, permissionless protocol that everybody on Earth can engage in. Anybody can mine it. So anybody can contribute security to the network. And anybody can run their own node, and anybody can own it, and then any company can plug into it. And so there's nothing that open. There is no monetary protocol or asset or currency that is so open as the Bitcoin asset. And so that's what's driving its value right now. It's an opportunity for people that have little to lose and much to gain. It's an opportunity for everybody, though. I mean, the way I think of it is, it's a moral imperative, a technical imperative, and an economic imperative. morally, it's an imperative because it's the best hope for 8 billion people to secure their property rights. If I give you a $50 Android phone, you can carry around in the Android wallet your property, and no bank or no hostile regime can seize it. And and that's the best property right you're ever going to get. I think it's a technical imperative for the same reason. You've got 8 billion mobile phones that will all have property, and so what's more important, storing your photos and your videos on your mobile phone, or storing all your money, all your life force on your mobile phone? I mean, you're worried about losing the photos you took on your iPhone, or you're worried about losing your life savings? Clearly it's more valuable. So it's a technology imperative for an Apple and Amazon and Google and Facebook, and companies like Square and PayPal and Binance and Coinbase are already extraordinarily successful by embracing it. You can see that right now.
So define what the defects are. Why is it the greatest monetary invention?
So I buy $1 million of gold. Okay, if the price goes up, the gold miners, first of all, the gold miners are going to create more gold and dump it on the market. If I could eliminate all gold mining forever, if I could wave a magic wand and make it impossible to mine any more gold, my $1 million of gold will hold its value better because it'll be scarce. But gold miners are inflating the value of the supply of gold by at least 2% a year or so. And then if the price doubles again, investors will invest in more gold miners, and they'll create more capacity to mine gold. So you'll create capacity to mine gold, you'll mine the gold, you'll crank up the rate at which the gold mines function. After that, people with gold jewelry will melt their jewelry down, convert it to gold bullion, and sell it, right? If the price of gold went up by a factor of 20, you would be like converting all your gold stuff into gold bullion because it seems like a good idea. They call it scrap gold, right? And then after that, bankers will issue gold warrants and gold paper and gold derivatives, and they'll sell them short without the gold because they can speculate in it, and they don't have to have a one-for-one coverage of gold to the gold derivatives. And so that's called hypothecation and rehypothecation. Okay, if it keeps going up, the governments holding gold will start to sell some of their gold to manipulate the price down. Right, and all of these, and ultimately, if it goes up enough, someone will club you over the head and take your gold, or a hostile regime will take your gold, or a politician will pass a law taxing your gold. Right? There's a lot of ways you lose gold because it's physical. How do you cure the problem? Right? I mean, here's how you cure the problem. You make it impossible to mine any more gold, and then you make it possible to take custody of your gold personally off of the exchange or off of the bank. So that way the bank can't hypothecate it or rehypothecate it, miners can't inflate it, investors can't create any more gold miners. And then you make it possible to move it from here to Switzerland or Singapore in an hour for a nickel. And that way, if you don't like your bank or don't trust your bank, if the state of New York passes a law taxing it, you move it to the state of Wyoming. You know, if the government passes a law taxing, the ownership of land in California, you can't move the land out of California, can you? If you have $1 million of gold in a bank and in a vault in New York City, there's only a couple of places you can move it. You can move it to London if you have 6 months. Okay, so you're going to be subject to the law of London or the law of New York. Can you actually move to your favorite island, or, can you move to the Cayman Islands and bury your gold underneath your hut in the Cayman Islands and be safe about it? Not likely. Can't even get it through the airport. Right? So the problem with other properties, and gold is the simplest example, but the problem, the challenge or the analogy holds with any property. I give you a bunch of money and I tell you you want to keep it and give it to your grandchild. Do you buy a building in Manhattan? Do you buy a ranch in California? Do you buy a stack of gold bars? Do you buy shares in a company headquartered in San Francisco? Do you buy bonds issued by a government or a company? Or do you buy Bitcoin? And you can see the problem, of course, is the debt is devaluing rapidly. the land in California can be taxed and is not movable. You know, the building in New York's not going anywhere. It might be valuable to a rich person that lives in New York. What about a rich person that lives in Beijing? Do they want your building in New York? How are you going to hide your building, right? Buildings get property taxed.